AMC to the moon, right? We all thought so. 72 might have been the moon. I don't know. Could go higher. We'll see. My name is AM Club from Stock Twits. I just started doing these videos because of Redbox, okay? I sat on the sidelines. I'm mostly just in chat for AMC and a whole bunch of other plays. Tesla, Kodak, OCGN, Tilray, you name it, okay? But there was so many of the same questions on Redbox, and it seems like I had to answer them on a constant basis. So this video, I just did one, but I wanted to do one in my AMC gear, just to kind of break down some barriers and show you that we're all the same, okay? We want to make money. We're here to make money. It isn't us versus you. We're not a distraction. We're under $100 million bucks. You guys are billions of dollars. Why you would be afraid of us is very puzzling. So again, I just wanted to break barriers and have something I can link to people to answer some of the questions. Now, if you've seen some of my videos, I'm going to start with the more complex stuff first so that you don't, just click away. And then I'll go to the more common or basic level stuff by the end. Okay? So we just had an amendment. I'm just going to get right into it. We had an amendment. Amendments are very common. You can go to any investors relations page for a stock, and you'll see all of their filings for the SEC. It's just commonplace. The amendment, it doesn't highlight exactly what was changed, okay? But on page one, because we have these bots in our chat saying, "Oh, they're going to dilute. They're going to dilute." The box, page 1, paragraph 1, states, if this is being submitted to the SEC for share offerings or dilutions, check this box. The box is not checked. There's about 4 boxes, none of them are checked. Page 2, in plain English, it just straight up says, this is not our intent to do a share offering or anything in those regards. Okay? Part of the amendment, another very common question with a lot of confusion, is the float size of 1.95 million. Webull is displaying the shares outstanding. Webull is a trash app. It's payment for order flow. So is Robinhood. It's banned in Canada, where I live. It's banned in Britain and UK. It's banned pretty much around the world. And the guy who invented the whole idea of payment for order flow was behind one of America's largest Ponzi schemes to ever have existed. This was his first pet project when he got out of prison. He's a felon, and some friends in high places, they went with it. Okay, so you need to get off those apps. They're front running you, and they're stealing your money. And any YouTuber that's shilling these free apps, moo, Webull, they're part of the problem, not the solution. They're there for personal gain. They want you to join their paid Discord. I'll never ask you guys to join paid anything. I'm just here to provide some answers and hopefully help you decide what you want to do in this play. So you can use Ortex or Fintel, which are paid data services, to find the float. If you don't want to spend money, you can go to Yahoo and you can type in any stock, and then you can click statistics. You go down to the right hand side and it'll say shares outstanding, implied shares outstanding, and then it'll say float. And the float on Redbox is 1.95 million, correctly listed. And a float is your total shares tradable on a stock. So they all still say, well, it doesn't matter. It's 89% institutional owned. It's irrelevant. And the reason it's irrelevant is because of the merger deal. It doesn't matter if they have shares, if they're locked. The only shares tradable is the free float. The only way to unlock the other shares is to exercise the $11.50 warrants and I'll get to that, or to have Class B shares converted into Class A shares and do an offering, or to do an offering. And none of that none of that's allowable under their agreement. Okay, they've gone into an agreement with Chicken Soup, and that those terms cannot be changed. The deal can, however, be canceled for $15 million. Either party can get out of it, or they can mutually agree to cancel it. Okay, so as it sits, the only number you need to know about or care about is 1.95 million. Now, why would they do the deal, people ask. Now, it's a bit convoluted. It has something to do with their debt, but also they have over 300 million in debt, which they've just refinanced. Why would you refinance if you intended to go through a deal? You would just do the deal and they would pay your debt. But what happened is there's a company called B. Riley that did a downgrade on us last week. B. Riley Investments stands to make a lot of money if Rdbx goes down, because they're hedged against us, and they've raised their price targets on CSSC. So the broad public who don't know what's happening will just read the headlines and go with what they're told, like the sheep that they are. If you go to B. Riley and you go to their investments page, recent investments, it takes you, I'm not joking, 30 seconds. The first line, you'll see $12 million of warrants for Chicken Soup. And that's just a YOLO gamble that the stock will go up, because they're not shares. So if ever Chicken Soup went to zero, they'd be screwed. Or if it went down, they'd be screwed, because the warrants have a set price, okay? Why does that matter? Well, who cares about B. Riley? Well, B. Riley is 75% owned by Citadel. So if you're in any of these meme plays, you know who Citadel is. You know what they're about. You know they hate us. You know they want to see us bankrupt. They want you to have 2 and 3 jobs. They want you to struggle in life, okay? They are behind the share offerings in June and January, as well as 3 others for AMC. They tried to kill and pretty much successfully killed both squeezes, okay? B. Riley and Citadel. If they are against something, I'm for it. Okay? Straight up. And that's on the same page. The investor relations page, recent investments. Scroll past the warrants. You'll see AMC there 5 times. You'll see it. They were behind all of the dilution. And guess who else they were behind market offerings on? HYMC. So, is AA in bed with these clowns? Or is he one of the people with a gun to his head who's being told, dilute, we'll give you the money, but you're going to dilute that company, and if you go bankrupt, we win. If you don't go bankrupt, kudos to you, but we're going to try to bankrupt you anyways with all of our hit pieces and our FUD. And I think that's what's happening exactly with Rdbx, because the CEO came out and said, he mentioned a war movie they acquired. Who cares? You wouldn't mention every movie you acquire. If it was Top Gun, you might mention it, but you're not going to mention an obscure war movie nobody's heard about and then say, these are tumultuous times. Those who seemingly have nothing in common, it's about them coming together and overcoming insurmountable odds. And then he fed that to Benzinga, and they'll post anything, especially if you pay them. Okay, so that's what's going on with B. Riley, the downgrades, the share price target, telling us like we're worth 50 cents. Well, they told AMC you're worth $1. They told a cent, and GameStop you're worth $1. Okay, how did that turn out? Let's move on. You're just a stupid DVD company. For starters, no one gives a shit what we are. The vast majority are here to squeeze shorts. That's called a technical squeeze. They're not concerned about the fundamentals, and they're not even concerned about the business. Okay? Similar to Ader. No one really cares what Ader is. Or KOSS, K-O-S-S. Nobody cared. It's a squeeze. So, putting that aside, DVDs is what they did do. McDonald's founded this company. McDonald's knows how to run a company. McDonald's eventually sold it. Okay? They, but in recent times, they have turned into a streaming company. They offer free streaming, free TV, free video. They also offer video on demand and paid streaming. So their whole future outlook is what's called AVOD, ad-based video on demand and streaming. They want you to eliminate your cable company entirely. Everyone in America pretty much has cable. Okay. Not only that, they have Netflix, they have Hulu, they have Paramount Plus, HBO, Netflix, Amazon Prime. So they have all these things. Apple TV, Disney Channel. They have all these things. They can't afford it all. So Redbox is trying to say, look, let's get rid of one of those companies. We'll make all of our revenue from ads. We don't need you to pay us. Netflix just lost 200,000 subscribers over that in the first time ever, and then their stock price took a hit 40% because they cost too much. They've done nothing but raise prices, and now they are going as well to offer AVOD. Redbox has already beat them to the punch. Can you imagine buying Netflix when it was $6.34? When people maybe laughed at it or were like, what the hell is this? Netflix at $6.34. That's what Redbox is. Do you have a TV? You're a potential customer. Do you have a phone? Potential customer. Computer? Laptop? Potential customer. Xbox? PS4? Maybe you're lucky enough to own a PS5. Potential customer. So their consumer base, their market is massive. It is huge. It's anyone on earth could use this product. You'll see what happens. It's going to grow. I do need to circle back to the float. I got a little sidetracked. Sometimes I get carried away in my thoughts. So with respect to the percentage ownership, on page 112, 113 of the 10Q filing from May 13th, okay? Sorry, there's just kids. They list who owns it, who's a greater than 5% holder in the company, and this was amended June 3rd. So they've put it out there. They're letting you know this is exactly who owns the company and what percentage they own, and you do not have to take my word for it. It's in the filing. You scroll to page 112 or 113. It's right there in black and white, okay? And the highest person on there owns 20%. There's a few that own like 5.7, 5.9. I didn't even see Apollo on there. I saw an Atlas. I didn't see an Apollo. So this whole they own 300%. Maybe they own some shares outstanding, but they certainly don't own any of the free float at this point. None. So that's just something I had to talk about there. And let's see here. Okay, so the contingency. So as it sits, okay, the deal is locked, set in stone. Warrants are not exercisable, but you can trade them. They're a different ticker. You can still trade them. They're speculative. It doesn't matter to anybody if you trade them. That's between you. That's between you, the buyer, and the seller. Like between you two. You can trade that freely as long as you want, all the way until the merger happens. Then they're auto-exercised, auto-converted, and you get your 0.087. Okay? Now, there is a contingency that if the deal falls through or is canceled, that if the stock price is $18 or higher for 20 or more trading days, so that would be 28 calendar days, then they can exercise the warrants. And that would be a dilution, and that would be bad, but you're going to get out before then. That's a neither here nor there. Currently, we're 634, so it's irrelevant. Currently, we're still in a deal, so it's irrelevant. And even if we were out of the deal, they would have to wait As per their filing, they would have to wait 20 trading days, 28 calendar days to even do that. Obviously, as it approaches those days, I would imagine you will see some selling, because who wants to get caught holding bags after a dilution? Again, that's neither here nor there. There's millions of failure to delivers on this. It's currently showing 181% of our float as of the last time we got information, which was the middle of May. The next time I asked Ortex, and they said it's going to be like around January 10th. January 11th is what they expect. So I would not be surprised if we see this go over 200% by then. So now I'll run by the numbers, because that's like the last thing that is kind of really what I need to talk about. So retail seems to be under the impression that this is like a normal occurrence. High short interest, high cost to borrow. It's anything but, okay, in life or in the stock market. Having a cost to borrow of 902% with an average of 817% is not normal. A credit card is 20, cash advance it, you're paying 23. Payday loan that you pay back in 2 weeks, 300%. Predatory. Mafia rates, I don't know, but they're probably better than 900%. Okay, and that's paid daily. We've verified this with people. These are legit numbers. My own broker, I update people on stock quotes every day. Friday it was over 700%. That's what I could borrow Redbox for on Friday, if they could even find me shares. At 100% utilization and no shares available, chances are I wouldn't have been able to short it anyways. I'm like never allowed to short pump and dump bios and things like that, because there's just never shares. And right now there's no shares for us, okay? 168% SI, okay? This is also not normal in any regards. In 12 years, this is just factual information that Goldman Sachs put out in an article by Forbes. You do not have to trust me again. This is Goldman Sachs and Forbes. In the last 12 years, 17 companies. The article was written right after GameStop squoze, and it has squoze. And it said, prior to GameStop, in the last 10 years, there's only been 15. So then you would add GameStop, that's 16, add a year, 11 years. So now and that was January 2021, okay? And they were 141% on January 27th with 30% cost to borrow. We are 902 max, 817 average. They were 30, and they squoze. And their float is 36 times larger than our float. Okay? 3,600% bigger float that has to move and squeeze, and their numbers were lower than ours. Those are numbers. They don't care about bias. They don't care about feelings. Just factual numbers that exist. So now you add 16 months, another year and a half, okay? So now we're into year 12. 12 and a half. In the last 12 and a half years, Redbox is the very next one that this occurred on. AMC, GameStop, Redbox. We weren't the first, and we will not be the last, and every single one of them squoze. Okay? That's how it works. Because you think me and you are the only people hip to this crap, not people with a lot of money, not whales. It wouldn't surprise me if people like Ken Griffin and friends play both sides vigorously in different accounts with different shell companies, and they make bank. Because it seems like every time a company goes to $2 or $3 that has this SI or short squeeze scenario, they rip huge. COS, Indo, INDO, DWAC, AMC, GameStop, Redbox. It's right now. It's going to happen. It's happening. Okay? I do a tally on stock twits, and I pull people from Twitter and Reddit and YouTube. And I just ask you guys to share your share count with me, and I add it. And I also ask people, if you sold shares, let me know. And so far we have over 30% of the whole float with only 220 people that replied. I think it's like 35% today. That'll be on my StockTwits profile. You'll be able to see that all the time. So it's fair to say we own the whole float with as little as 675-ish people. 675. There are, at its peak, AMC had, that we knew of, 4.1 million people involved in that stock. We don't even need 1/1000th of that. We don't even need one. We don't need 1%. We don't need 0.5%. We don't need 1,000th% to even amount to what you would have to have in us to be convicted and hold and squeeze. If we had what they had, I can only imagine. Okay, I put numbers out today on StockTwits as well. If you look at their SI and their CTB, we're the highest. I compared AMC, GameStop, Ader, and us. They don't even come close. GameStop is 110 or something percent cost to borrow right now, and that's way up. They were like 20% for a long time, 10%, 9%. AMC was as low as 0 3 weeks ago. 0. Short it for free, okay? You do not see these numbers. I'll say it time and time again. It is not normal. It is not regular. Don't get used to it. After this happens, I personally will probably pull out and just wait for the next one and not even risk my money with these crooked, manipulating MFers. Because look what they do to stocks. On Thursday they pump Tesla. On Friday they dump Tesla. What can you reliably invest in? Netflix goes down 40% over their first ever sub loss and some, future outlooks scare. That's a big loss for such a big company, okay? That's very scary. But what you can rely on is the history that proves that these squeezes are legit. They will happen. When you get these numbers aligning, like in the past, a squeeze happens. That's what happens. So I'm gonna cut my video off here. I hope I didn't forget anything. I hope I've added some stuff that some of you guys who've seen some of my videos maybe haven't heard. But like this shirt represents, okay, that we're not different. It's retail. We're just people. We're normal, everyday people. I don't know what you're doing today or what you're like, what you're going through in life, but we're just everyday people. Okay? We're looking to make some money. We're looking to take care of our family. Have a little bit less stress. There's no reason to hate one another. Hate the people that are trying to hold you down. Okay? That are trying to drown you in debt and ruin America and the world and bankrupt companies and take away things that you enjoy and take away your freedom and your opportunities. Okay, those are the people you should be always angry at and mad at and cussing out and demeaning. Don't demean each other. If you're not interested in the play, that's fine. It doesn't matter. Invest in what you want to invest in. You can be 100% in AMC. You can be 40% in AMC. You can be 10%. You can have 100 shares of Redbox or 10,000 shares of Redbox. It all helps. It all matters. Dumping your money into warrants. One last thing I will say though, dumping your money into warrants right now and dumping your money into call options, buying them, that doesn't help the squeeze at all. If anything, all it does is help the hedge funds. We had 602,000 shares worth of premium out of the money on Friday because they introduced weeklies and you guys got wrecked. And all that did was give the market makers and the hedge funds some money. Doesn't help the squeeze because it doesn't put any pressure on. Yes, you can gamma squeeze on call options only if they're in the money, and we were last week. We gamma squoze and we went up, but this week we didn't. Okay, it's just a straight gamble, doesn't put any pressure. Buying and holding puts pressure, and it removes liquidity. Taking away every share that someone sells and holding it is one less share for them to get. And when you only have 1.95 million shares, and already 230 of us own over 30% of that, we own over $4.3 million of this free float. Every share counts, okay? Have a good weekend, guys.